To hit $1,200 a week in dividends, you'd need around $2.5 million in the S&P 500. Sounds impossible, right? But what if I told you that with just $10 a day, you could achieve the same goal in a fraction of the time? In this video, I'll show you how to reach the $1,200 a week income just using $10 a day, the fastest way possible. I will show a tailor-made portfolio specifically designed for this strategy, which will reach the goal 3 times faster than the broader market. In the end, I'll show you a side-by-side comparison of the S&P 500 and the tailored portfolio, explaining why this approach works best for this strategy. But why $1,200 in dividends per week? Let's break this down. $1,200 a week in dividends is a game changer for your finances. Think about it. That's $62,400 a year, meaning a roughly monthly income of about $5,000 without having to clock in 40 hours a week or stress about a side hustle. Since these returns will be in the form of dividends, it's a tangible and realistic target. Unlike I want to be a millionaire or I want to retire early, $1,200 a week is achievable with a steady, smart approach to investing. The beauty of dividend stocks is that they pay you, well, dividends. Regular payouts that can become a reliable stream of income over time. Even if you're starting small, dividends compound. What starts as small payments grows exponentially as you reinvest those dividends and increase your contributions. More on that later. Additionally, $1,200 a week is just the right amount that can make a big impact in most people's lives. For many, it can cover a majority of their living expenses, allowing them to pay bills, take vacations, or just have extra funds to invest further. This is where dividend investing comes in. You don't need a full-time job or a high salary to reach this goal. You just need the right strategy, the right stocks, and a little bit of time. The important factor here is the right stocks. If you want to reach your goal in the fastest way, you need to have the perfect stocks for the strategies. Next, I'll show you how much time you would need if you invest in the basic S&P 500. The S&P 500 is a well-known index that tracks the 500 largest companies in the US, and its performance gives us a pretty solid idea of how the market is doing overall. But how long would it actually take to reach that $1,200 per week in dividends if you're investing in something like the S&P 500 Global ETF, which tracks the global version of the index? First off, we know that the average annual return of the S&P 500 over the past few decades is roughly 8 to 10%. Now, not all of that return comes in the form of dividends. On average, S&P 500 companies pay out about 2% to 3% of their stock price in dividends per year. So if you're aiming for $1,200 a week, you'd be looking for an annual dividend income of about $62,400. To hit that target, you need to have a massive portfolio. Let's say the average dividend yield on the S&P 500 Global ETF is around 2.5% annually, which is right in the middle of the 2% to 3% range. To generate $62,400 a year in dividends, you'd need to invest about $2.5 million. Now, I get it. $2.5 million sounds like a lot of money to come up with, but as the title of this video says, we can only invest $10 a day. Using the chart, we can see that with a daily contribution of just $10, your portfolio will grow slowly at first, with dividends starting to become noticeable after several decades. Based on typical growth rates and dividend reinvestment, it's estimated that it would take roughly 60 years to reach the point you'd be pulling in $62,400 annually, or $1,200 a week from dividends alone. Sounds good to reach there, but let's be real, 60 years is a long time, and unless you're already in your 20s or 30s with a long-term plan, it's not the most practical approach to hitting your goal anytime soon. So how do we speed up the process? In the end, I will show you a tailor-made portfolio that is specifically designed to reach the $1,200 a week target in the fastest way possible. In fact, it will reach that target in less than 20 years. But first up, you might be questioning if $10 a day is enough. Here's the truth. You don't need a ton of money to start making serious progress towards your $1,200 per week dividend goal. In fact, $10 a day is all it takes to get started. Now, I know that might sound too simple to be true, but stick with me for a second. To hit your goal of $1,200 per week, you'll rely heavily on reinvesting the dividends back into your portfolio. This is where compound growth becomes incredibly powerful. Reinvesting dividends means you're buying more shares, which in turn pay you more dividends. Over time, this creates a snowball effect that accelerates your portfolio's growth. For example, let's assume that the average dividend yield of your portfolio is around 4.5%. You start with a one-time investment of $1,000 and assume an average dividend yield of 4.5% per year. This means at the end of the first year, your $1,000 would generate about $45 in dividends. These $45 in dividends would then be reinvested into your portfolio, increasing the total value. At the end of year 1, your portfolio would grow to $1,045. Now, if we fast forward to year 2, your portfolio is generating 4.5% of $1,045 in dividends. This would add an additional $47.03 in dividends, meaning you'd earn an extra $2.03 in the second year. This amount slowly grows over each year. At first, the difference is not noticeable, but later on, when you reach a certain point, the difference becomes very noticeable and the growth becomes exponential. But for this to work for you, you need to build a portfolio that is tailored to growing the dividend amount. When it comes to choosing the right dividend stocks, you've got to think a little strategically. After all, the goal here is to build a portfolio that will generate enough income to reach that $1,200 per week target, and to do so in the most efficient way possible. So how do you pick the right stocks? Let's break it down. One of the easy ways to get exposure to a diverse range of dividend stocks is to invest in income-based ETFs, or exchange-traded funds. These ETFs offer instant diversification, reducing risk, and are especially useful for beginners who don't have time to monitor individual stocks. Covered call ETFs are another type to consider. They invest in dividend stocks and use options to generate additional income, which can boost your overall returns. Why go this route? Well, ETFs give you instant diversification. Instead of picking individual stocks, you're already investing in a basket of companies, which spreads the risk. They're particularly useful if you're just starting and don't have time to monitor individual stocks regularly. Next, I like to include REITs for a quick boost. REITs are required to pay out at least 90% of their income as dividends, making them a solid source of high yields. You don't just want stocks that pay dividends now, you also want to focus on stocks that have a track record of increasing their dividends over time. Dividend growth stocks not only pay regular dividends but also increase those dividends year after year. Companies like Broadcom, AVGO, and Caterpillar, CAT, are known for their solid dividend growth, making them excellent options for long-term income generation. To reach your $1,200 per week goal, you'll need a mix of high dividend yields and long-term growth potential. Now that we've covered how to choose the right dividend stocks, it's time to build your actual portfolio. You want to make sure the mix of stocks you choose is both high-yielding and well-diversified. The goal here is to generate the steady stream of passive income you need to eventually hit that $1,200 a week in dividends and only with a $10 daily investment, the fastest way possible. Here's an example of a diversified dividend portfolio that will help you reach your goal faster. These are the stocks I will use for this specific strategy: CubeSmart, Broadcom Inc., Lennar Corporation, American Tower Corporation, First Trust Buy-Right Income ETF. You might be wondering why these specific stocks. Well, here's why each of these choices is vital for hitting your $1,200 a week goal. Each stock here serves a different role. The REITs, Cube and AMT, offer high dividends and steady income. Broadcom and Lennar give you that balance of growth and dividends, while FTHI adds extra income through covered calls. All these stocks have a history of consistent dividend payments and even dividend growth. If you have a portfolio of these stocks, that portfolio will have a dividend yield of 3.60%, a dividend growth rate of 20.55%, and an average share price appreciation of 13.05%. Let's break down how this portfolio would grow over the next few decades if you stick to your strategy of investing $10 a day or $3,600 annually into dividend-paying assets. In the first year, your portfolio will have a value of $3,600, reflecting only your initial contributions without much return from dividends yet. But this is the foundation for future compounding. At the 5-year mark, it will be valued at $25,507. By year 10, your portfolio grows to $87,503. Fast forward to year 19, and your portfolio will be valued at $657,932. By now, you'll be receiving an annual dividend of $68,566, or about $5,713, meaning a weekly dividend income of about $1,300. The key takeaway from this is that we hit that mark in 19 years. Compared to the time it took the S&P 500, the customized portfolio tailored for this specific strategy is the fastest way to reach $1,200 with just a $10 daily contribution. You can clearly see that the time required by the portfolio, which is 19 years, is 3 times less the time required to reach the same level using a broader market like the S&P 500. This accelerated growth is primarily due to the higher dividend yield, consistent reinvestment, and the strategic stock selection. allowing you to reach your income goal much sooner. Want to know how to turn a $7 daily investment into a $1 million portfolio that pays the same amount of monthly dividend income? Click the video on the screen to find out.